Hello, welcome to episode 7 of Thick Sustainable Infrastructure Finance. Today's topic is, does green always mean thick? Bill, we see a lot of green bonds in the market right now. How do they fit into our thickness framework? And are they helping to build the bridge?
Well, thanks, Karen. Today's topic is the genesis of our unique mission. It demonstrates why many current efforts, though well-intentioned and in some cases helpful in the short term, are thin and fail to meet the challenge we face. It also illustrates the importance of our affirmative screening process. We recently uncovered a green bond issued by Palm Beach, Florida. We've invested in the bonds of other Florida projects, and in this bond, it had been certified by an independent agency as being green. So I forwarded the offering to John for a thickness evaluation.
Our first pass at thickness scoring starts at the conceptual level. We take a big picture look before we dive into the details. In this case, after reading the offering memo and the green certification details, we looked at what these bonds would actually fund. What will they do? And here's what was immediately obvious. These bonds fund a program called beach renourishment. The purpose of beach renourishment, as depicted in these slides, is to renew beachfronts damaged by storms so that their recreational and aesthetic qualities are restored, primarily by importing and spreading sand and other material from elsewhere to replace sand that has been washed away. It's a relatively simple and straightforward concept. Now, this certainly allows residents to recreate again. It helps sustain high property values in these pristine coastal areas. And so from that perspective, these bonds accomplish an outcome. And while we make no judgment about the merit of that outcome, if that's how those taxpayers wish to spend their money, this is clearly not sustainable and clearly not thick. Water erosion will not subside, but instead continue to gain momentum as sea levels rise and storms intensify. So beach renourishment is going to be needed on a regular basis. And that's probably not the first time Palm Beach has had to renourish its beach, nor is it resilient. The renourished beach will do little to protect against the next storm, and certainly does not restore the environment damaged by the last storm. And even worse, the whole process of renourishment involving operating heavy equipment, as you can see in these slides along the shore, can have the unintended consequence of damaging native habitat and species that live along the shore. So it was pretty easy to see at the beginning that this was not a bond that warranted more detailed evaluation. And something we're finding is that bonds with green certification have similar attributes. In other words, when we dive into the details or even take a more conceptual look at them, we really have a hard time finding something that would comply or comport with our thickness evaluations. So this makes us cautious of the green bond label because we are vigilant on behalf of our investors to avoid greenwash.
Yeah, this is why our evaluation process includes affirmative thickness screens up front at the beginning of the process. It's a more time-consuming process, but it's essential to identifying thick, sustainable infrastructure in an investment universe that offers little transparency, few standardized metrics, and a plethora of labels and terms with nebulous meanings. While accepting green bonds as thick would make things simpler, as this case demonstrates, not running each opportunity through our affirmative screening process puts us at risk of deploying our investors' capital inconsistently with our mandate.
Thank you, Bill and John. Stay tuned. In upcoming episodes, we'll dig into additional examples as we help build the bridge to a sustainable future. If you haven't subscribed to our channel, please do. And as always, please let us know what you think. We always learn from our colleagues.